The real chain reaction looks more like this. The war pushes oil up, higher oil can push inflation fears up, and that changed rates expectations, and then that affects both Circle's earnings setup and overall market sentiment. Circle just got smoked it, and the way this stock sold off, you would think the business completely fell apart. Like USDC is shrinking, like the growth is dead, and like the whole stablecoin story is broken. But that is not the number says, and also not the case. Circle's fourth quarter results still showed a strong growth in USDC circulation, on-chain volume, revenue, and adjusted EBITDA. What really happened is the market got scared. Scared about regulation, scared about stablecoin rewards, scared about how much control Washington could have over this whole space. Bloomberg reported Circle dropped as much as 22% intraday in its sharpest drop on record as investors react to possible changes in stablecoin rules. So in this video, I want to break this down. What the Circle actually reported and why the stock got hit so hard, and how the Iran and the US conflict could affect the company. And at the end, I'll tell you whether I think this is a buy, a sell, or just a name to stay away from. And my honest opinion right now, the business still looks strong, solid, and right now it's at a discount. And the stock got punched because the market is scared of the rules changing. Before we get into the numbers, here is the main thing you need to understand about Circle. This is not just a crypto token story. Circle is trying to become the money rails for the internet, and that is a real bet. They want the USDC to be used for payments, cross-border transfers, on-chain finance, developer tools, and eventually a much bigger internet money system. In the deck, Circle literally frames stablecoin as an internet-native money layer and show its platform spanning payments, FX, tokenized funds, wallets, contracts, and cross-chain transfers. So if you are looking at this company like it's just a stablecoin issuer, I think you are missing the big picture. The bull case is not just that USDC grows, the bull case is that Circle becomes the real financial infrastructure. And if that happens, this stock could still have a huge upside to the roof. What the Circle actually reported. Now let's talk about the quarters, because this is where the market reaction starts to look a little crazy. In fourth quarter, Circle did 770 million in total revenue, and the reserve income USDC in circulation ended up in quarter at 75.3 billion. USDC on-chain volume hit 11.9 trillion. EBITDA came in at 167 million, and adjusted margin was 54%. That is not what a broken company look like. That is also not a company rolling over. That is a company still putting up some serious number and had a huge growth. And here is the part that matters even more. Circle's reserve return rate was 3.8% in fourth quarter, down from the year before. But the reserve income still rose to 733 million because USDC circulation grew so much. Other revenue was about 37 million, and the total distribution, transaction, and other costs were 461 million. So in simple language, even though the yield side go a little weaker, but the business still keep growing because more people and more platforms were using USDC. That matters a lot, because one of the biggest bear arguments has always been, what happens if rate comes down? What happens if more people use other stablecoin? And in this quarter, at least, showed that Circle is not totally helpless if rates move lower. Why the stock got wrecked anyway? So if the number were so strong, why did the stock still get crushed? Because market is looking past the quarter now and focus on the regulations. We can see the Circle stock price was climbing up after the fourth quarter report. But recently, the report earlier this year that proposed US legislation would prohibit paying interest or yield just for holding a stablecoin. And Bloomberg reported that the latest worry around stablecoin rewards were a major reason Circle sold off so hard this week. And this is what the market is really asking right now. If regulators make stablecoin less attractive to hold, does growth slow down? If they limit rewards, do adoption incentives get weaker or not? If the rules get tighter, does Circle lose some of the upside investors were paying for? And that is why the sell-off was so aggressive. This is what now the market is saying Circle had a bad quarter or whatever. This is what the market was saying. Okay, but what if the rule change and the future is not as profitable as we thought? That is a very different fear. Now, with all that said, I still think the bull case is very real because USDC is clearly still growing, and the Circle stack shows 6.8 million meaningful wallets and 30 blockchains with native USDC integration and 163 billion of combined mint and redeem volume in fourth quarter. The presentation also shows Circle's network continuing to grow, including 41.3 billion of CCTP volume and stronger transaction share of USDC. And that is not small, that's a scale. That is a distribution, that is actual usage of USDC. And the Circle is not doing more than just sitting there collecting reserve yield. They are building out more products. Arc testnet launched with 100 plus companies, near 100% uptime, around 0.5 second finality, more than 166 million total transaction, and about 2.3 million average daily transaction, with the main net still on track for 2026. Circle Payments Network had 55 financial institutions enrolled, 74 under review, and about 5.7 billion in annualized TPV based on trailing 30-day activity. EURC circulation reached 10 million and USDC assets were 1.5 billion. Circle still highlighted momentum with Visa, Intuit, Polymarket, Bermuda, and a conditional OCC approved for a national trust bank. And that is why I cannot look at a Circle just call it a rate trade. It is not only that, it is a long-term bet on stablecoins becoming the real financial infrastructure. Now let's be fair, there is a bull case, of course there is a real bear case here too. Because right now Circle still makes most of its money from reserve income, which we mentioned from the reserve yield. In fourth quarter, reserve income was 733 million, while other revenue was only about 37 million. Realtors also noted that Circle's earnings are highly sensitive to Fed policy because the company owns yield on the reserve backing USDC. So when interest up and side down, it always have a big impact on the stocks. That means if the rate fell fast, or if the reserve economic get weaker, or if the competition gets tougher, the market could start valuing this company very differently. And here is another issue. Circle is not keeping all of the economics for itself. Fourth quarter distribution transaction and other costs were 461 million, which tells you a big chunk of the value is still being shared out through partners and distribution channels. Circle also posted a 70 million full year 2025 net loss from continued operation, although that's heavily affected by 424 million of IPO related stock compensation, while adjusted EBITDA for the year was 582 million. So no, this is not some perfect software machine or perfect bad. It is a strong business, but it still has a real risk and high risk I think I should let you know about. How Iran and the US conflict affects Circle. So now let's get into Iran angle because the part actually matters more than most people think. The conflict does not mean Circle automatically wins. This is too simple. The real chain reaction looks more like this. The war pushes oil up, higher oil can push inflation fears up, and that changed rates expectations, and then that affects both Circle's earnings setup and overall market sentiment. Reuters reported that the Iran conflict pushed oil about 100 a barrel, strengthened the dollar, and raised the concern that high energy price could keep inflation sticky and complicated the Fed's path. Reuters also noted markets were dialing back to expectation for rates cut as the war disrupted energy supplies. Now here is where it gets interesting for Circle. On one hand, high for longer rates can actually help Circle's reserve income model because Circle earns yield on the asset backing USDC like we talked about. But the Circle's revenue is still highly sensitive to interest rates, even though management prefer lower rate for broader adoption and money movement. So purely from that angle, the conflict can actually support earning in the near term. But on the other hand, the same conflict can also hurt the stock because wars create a risk of market that make investors nervous. They bring more political attention to money flows, and they can bring more security to crypto. Reuters reported that US investigators have been monitoring whether the crypto platform has helped Iranian actors moving money or get around the sanctions, with Iran's crypto activity rising sharply in 2025. So this is a clean way to say it, that the Iran conflict could help Circle reserve income set up a bit, but it could also hurt in the stock by making the whole crypto space feel riskier and more heavily watched, because the whole government is paying attention to it right now. And that is why it is a mixed factor. I'm not straight bullish on this one like all other people do. So now the big question, buy or sell? My answer is this: I would not call Circle a sell here. I'd call it a speculative buy unfair. And I say speculative on purpose, because this is not a safe stock. This is not a small stock either. It's a huge bet. And this is the definition of a name you don't want to ignore the regulation. But if you zoom out, the business still looks like it's moving in the right direction, because the fundamentals haven't changed, and the USDC is still growing, the platform is still expanding, the network is still getting stronger, and the Circle is guiding for more growth, including 40% multi-year USDC CAGR and 150 to 170 million full-year other revenue and 38 to 40% RRDC margin. So to me, the market sold this like the business is broke. I for sure think it's overreact. And I do not think the business is broke. I think the market is just got scared about it with a lot of things going on. And sometimes, that creates opportunity, which means you can get a good share on bargain price. So here is my final review. Circle is one of the most interesting public stocks tied to stablecoin, tokenized finance, and internet money. But now the market is finally treating it the right way, because we see how crazy stock price went through the roof when it's just IPO. And now we know it's not a fantasy stock, it's not like some easy software story, it's not like pure crypto hype, but like a real company with the real upside, real growth, and very real policy risks. And after a sell-off like this, I'm not looking at a Circle and saying wrong. I'm looking at it and saying this is kind of stock you study hard when fear gets loud. Warren Buffett said, buy it when other people fear, because the fear is real, but the business is also real too. Thank you for watching this video.